Good morning, everyone, and welcome to the weekend update. Let's see, it is July 29th, and we wrapped up a pretty good week, I think. We closed out a couple trades, and many of our trades are in very good positions, which we'll look at in just a moment. So we are continuing the after a big jump up and then a pullback, which I would consider to be, kind of in line here, we're starting our ascent again in our equity curve, which is good. We've closed out a few additional trades here. We can come in and kind of look at that list. So here's some of the recent trades that we closed out, these top two being closed out here this week. And there's some additional details on each of these, which is included in the circle below that says Archive Trade Circle. I'll be moving these two trades into that archive circle, but I put a video in each one of them that kind of walk through them because these had some extensive adjustments to them. Well, actually, this one did not. This top one here was an on and off. It was really nice. That's the way our trades should be. Put them on, take them off 8 days later for 11% profit. This one, however, on the other hand, we were in it for 22 days, and there were multiple adjustments to this, 6, 7, maybe even 8 adjustments. I don't remember. That's highly unusual. But of course, during this period of time, the rut moved up significantly, and it required a lot of adjustments. In fact, if we come over here and take a look at the rut specifically, we can see that if you go back 20 some days here, right around in here, it would have been, the rut went from 1815, almost up to 2000. So that's almost a 200-point move in the rut, which is a very big move. And of course, if we're trading delta neutral, meaning that we're looking for the market to kind of stay sideways for a little bit, and it certainly did not, that requires us to make a lot of adjustments. So anyhow, bottom line is the equity curve is continuing the move as we want. Let's look at our open trades here a second, and I'm just going to pause a second. All right, so as we look through our open positions, of course, our Google wheel strategy is doing great, up just under $300. We did sell one put in Google, and then we were able to close that at close to max profit. Then we sold a second put on Google. And again, the goal here is to, at some point, have Google put to us. And when it gets put to us, for example, right now, our current put is at 133. But if Google, our current put is at 125. But if Google were to pull back to say 124 and we got Google put to us, we would have approximately, $3 to $4 less that we actually would have paid because of the credit that we've taken in a couple different times. And of course, each month as we do this, that decreases our cost basis in Google by about $2 a share. So right now, if we were to get assigned at 125, meaning we'd have to pay $125 per share for those 100 shares, because we've taken in about $4 in credit total, our actual cost would be $121. Again, as we march forward and we continue to sell puts and don't get assigned for maybe 2, 3, 4, 5 months, our cost, once we finally get assigned, could end up being $10 or more below the price that the stock is put to us at. So again, that's the goal with a wheel. That's the start of the wheel. We'll get more into what do we do once we get assigned, when we get assigned. So this is going to be a long-term, ongoing open trade that will just continue to work through the wheel process. This particular trade here has a couple weeks on it. It's in a great position. I do think we might get a little bit of chopping, maybe even a little bit of a pullback in the rut, which would all work great for this trade. So I do, for right now, plan on leaving this entire structure open. This particular trade here, we just opened this trade up this last Friday, and it's about a 2-week out. Just flat butterfly. the goal here, if our market moves up, we will add an additional butterfly or two to this position. Again, the premise being that the SPX is possibly at a resistance area where it might chop sideways for a little bit. Or maybe even pull back. So that's the reason that we're doing this as a flat fly, because this has negative delta associated with it, meaning that it will get some profitability in it if the market pulls back a little bit. This particular trade here has just kind of been it's been a struggle from day one. It's never been down much, but we just can't seem to get the profit into this thing. And this will expire next Friday. So the one thing we do have going for us is this calendar is centered pretty well, so we could have some profitability creeping into this calendar. And, you know, we're really not going to look for much out of this trade. If we get this trade back to a scratch or maybe even a slight profit, we'll just pull the plug on it. And again, not a lot of risk in the trade necessarily, but not a lot of what I would call a good chance or good opportunity for decent gains either at this stage. Then we have our QQQ trade, which I'll move my face out of the way here. We have adjusted, and I'll just very quickly show this for those that might have missed it. So this was a trade that we've worked into, not sure why I can't, there we go, that I have worked into a no-loss trade. Now this arc here, our T0 line, is not showing up exactly correctly. That's because the markets are closed, bid-ask spreads are wide, so it's kind of interpreting some data that isn't accurate. But the trade is in fact up about $550, $600. So the amount it's up, I think, is pretty accurate. I think it just boils down to the shape of the curve here isn't exactly right at this point. But let's come in and just take a look at, I won't go through this entire thing, but here I will go back to the 25th. And we can see that, you know, the market was selling off, so I was proposing an adjustment that was going to reduce some risk to the downside on this trade. We put that adjustment in, and then the market, you know, shot back up here. At that point, I pulled out two of our condors, basically reducing our risk on both sides, essentially locking in some profit. So that was our position there. Then on the 28th, I went and I ended up, I had to do this in two separate trades because we had a different number of call verticals than we had in put verticals. I could put the order out there to close some of these or to roll some of these in, you know, rolling 7 on one side and 8 on the other side, but it wasn't getting filled, and sometimes that happens when you have odd numbers in trades. So I ended up getting the fill in two separate trades. I rolled up these put spreads, the 7 put spreads first, and these trades were done literally back to back in a matter of a couple minutes of each other. So I, you know, raised this swing all the way up to here. And of course, that gave us momentary risk to the other side and a lot of negative delta. We went from 47 negative delta to 129, which was not my goal. Again, I want to keep this largely as a delta neutral trade. So as soon as I was filled on that, then I went and I raised this other side by rolling those calls up. At the end of that, we ended up in this position here. Now, the reason I chose to go here, a case could have been made to totally close this trade because we had a nice profit. We were up about 100% on the trade. You can see here right now that we're up that, you know, right at 100%. However, when I can do this with a trade where I have no risk of loss anymore, now I can give back a little bit of my profit. So my current 584 profit, if the market tanked, that could drop to 434. So I do have the risk of giving that difference up. Or if the market rips to the upside, you know, I could end up with 535 in profit instead of the 584. But when I can be in a position like this to where I have no risk of loss, at that stage, I'm willing to keep some of this position open and let this decay. So again, this expires this coming week. So this T0 line should start moving up fairly rapidly through the week. If the market stays in this general range, I could start thinning this position after we're up another $100 or so, or maybe even close the whole position out if I think there's a potential for a sizable market move. But at the end of the day, the key here is that I have a no risk of loss trade, and I have the opportunity to milk this a little bit. So that's kind of my game plan, is trying to milk as much as I can out of this specific trade. So everything is looking good. We may open one additional trade here in the early part of this week, so look for that potentially. And then let's just take a look at our markets. So if we look at the rut, well, the rut has come up into what certainly seems like a pretty strong resistance area, because we had a lot of consolidation here for a number of months. Then the market sold off, rallied back into the same general zone, sold off. Then, rallied back into the same general zone, sold off. Now we've rallied back into the same general zone. So my expectations here at this point, if rut were to continue to rally, maybe it could rally up here to the 2040 range, but I'd be looking to play a range in rut from probably 2040 down to 1900, somewhere in that general range. So that roughly 120, 140 point range is kind of what I would expect out of the foreseeable future in rut. Then if we take a look at SPX, similar story here, although the SPX has certainly run harder and faster. And let me just extend this trend line here a little bit. So in the case of SPX, we've also run up into what I would consider a bit of a resistance area, because much like the rut, we had sell-offs into this general zone, a bounce, sell-off into this general zone. Then we cut through it like a hot knife through butter, which can of course happen. Then we came up, it was resistance. We came up, it was resistance. And now we're back up, and my opinion is that this is going to be resistance again. And I would expect a likely trading range of maybe this 46.25, somewhere there, to maybe down here around the probably around the 44.50. So probably about that 200 SPX point range, or 150 SPX point range. So that's kind of what I would expect going forward at this point in SPX for the next 4 weeks or so, again barring any unexpected news is maybe the best way of putting it. So that should give us the weekend update. If you would, please make sure that you like and subscribe. Feel free to make any comments, ask any questions, etc. This helps me a great deal when I see what people are paying attention to, and what they comment on or what they like. So again, thank you so much, everyone, and that is the weekend update for July 29th weekend 2023. Take care. Hello, everyone. You can hear my noisy crow talking to me. I'm sitting out in the back patio here. But anyhow, I wanted to walk through this particular trade as this trade had a lot of adjustments to it. Again, we are in a period of time where our market has ripped up, 500 points in the past couple weeks, and it has been challenging to stay on top of some of these trades. So I just want to kind of walk through the entire trade here, start to finish, give people kind of a sense as to how this played out. So we started back on July 5th with a flat fly, with the premise or thought that the market might pull back a little bit. And of course, this is a negative negative delta trade, which a pullback would have generated a little bit of profit in the trade. We're kind of at what might have been a resistance area at that point. By July 11th, our market had ripped up, and so the choice that I made here was to roll out our calls in time, essentially calendarizing them, which did add a little bit of risk here to the downside and to the upside. But overall, it widened out our tent and brought in a lot more theta into that position. Theta went from 15 to 55, and it reduced our delta slightly. So all of those were good things. Then we marched this thing forward to the 13th. The market continued to rip up further. Again, when we started this, we were back here at about 1875. Now we're up here at 1950. So that's in a matter of about a week's worth of time. So I had proposed adding an additional calendar to that upside, which got filled, and our position then looked like this. Then as the market continued moving up, I ended up taking out some of the original butterfly structure because it just didn't really serve a purpose anymore, and this reduced, as you can see, our downside risk considerably, and it opened up our upside tent a little bit here as well. So it was kind of a win-win to be able to do that. Then we ended up in this position on July 13th. By July 18th, our market had ripped up further, and then I was proposing taking off this lower tent, or our original butterfly, or excuse me, yes, the original butterfly, pretty much all together, and we got filled on that. But then that same day, I went and proposed this adjustment of taking out basically one of these lower tenths of a calendar, because I was fine having some downside risk, and I really needed to open this upside up further because, again, our market just continued to run. Again, when we started this, I mean, market was way down here somewhere. So huge up move in rut over a period of a couple weeks time frame. So once we got filled on that, we were in this position on July 18th. And then by the time we got to the 26th, we had moved up even a little further, and I had proposed taking out a little more of that structure, and all of this happened on the 26th, to where I proposed just getting into a single calendar, which we were in, and we were in this position right here. And fortunately, on the 27th, our market did finally take a little bit of a breather. It pulled back, not a huge amount, but it pulled back by about 25 points, which is a pretty good move in rut, but it pulled back to give us this opportunity to squeak a little higher profit out of this trade. So again, this is it's challenging when you have to have this many adjustments in a trade. I would say 60% of our trades, of the trades I do, butterflies and calendars, we put on, take off. There usually isn't an adjustment in them, or if there is, it might be, maybe one adjustment, and then probably 15–20% might require 1 to 2 adjustments. Very seldom do we end up in an environment where we have to have 3, 4, 5, or in this case, whatever this was, 6, 7 adjustments. That is not normal in a market, but of course, again, our market ran a couple hundred points in the rut, which is a very big move in the period of a couple weeks on this trade. But ultimately, particularly when you factor in all of these, take commissions. I'm factoring commissions here at $1 per, which most people probably aren't paying that much. And of course, anytime you make a trade like this, you have slippage. So, additional adjustments are just kind of the kiss of death, and they usually do not allow you to get a decent return out of a trade. But we were finally able to pull that out of this one, and I wanted to kind of document that process and how it happened so that people can go back and look on this trade historically and understand how it progressed. Thank you.